What up? Back, baby. We're back. What a time. Cambo, what's going on, man? Happy to be here. Yes. GM. Nice little 6-week break.
Yeah, and we have some pretty big moves. R2 has left Canada and moved on to the Death Star. So he is circling around Earth right now.
Yeah. That's not a moon.
Yeah, as you can see behind him. Importantly, and the one area lit up brightly, you could see he brought his bottles with him. He has his drink, as any good Canadian would.
I heard the selection is limited on the Death Star. I had to stock up.
Yeah.
Because, as you know, I do enjoy...
Nothing wrong with that.
A few drinks, a few cocktails.
Do you know the date of our last show?
Yes, it was June 31st, I believe.
And on June
30th. There is no June 31st.
There isn't. So I'll give you that one. He brought his bottles with him to the Death Star.
Yes.
Emphasize that. On June 30th, Ether, the native cryptocurrency of the Ethereum blockchain, made a low of $998.
Yeah, I was actually looking at that. It has been up only since we stopped the show. So if while we're on here, things start to go sideways, I'm just going to click the end stream, and it's the last thing that you're ever going to hear from us.
But I will tell everybody listening right now that as of this minute, Ethereum is $1,875. That is an 87.87% rise over that period. So welcome back. That's pretty damn bullish. We are going to keep track. If the show goes on hiatus again, we will mark where ETH is, and we will see where it is when we get back, and we will see if there is some sort of correlation. Until then, we are just going to celebrate as ETH is up, as I just said, close to 90%, over 100% off its lows, while Bitcoin, the most valuable and first, as I hear, cryptocurrency, is up a paltry 30-something%.
Yeah, definitely not quite keeping pace, but also didn't hit the lows in the same way, right? It was
That's fair.
It was pretty resilient, not entirely resilient, but pretty resilient during that big pullback that everybody else saw, 70 to 90%. I think Bitcoin was down 60% from its high, which, I mean, is still a lot, enough to get all of the people out there going, oh, told you about that crypto, eh? I'm like, man, whatever. Mm-hmm. But yeah, I mean, it's been a minute since we've done this. Really appreciate everybody reaching out, asking when the show was going to be back. Free Market actually just sent out a tweet to let people know. We didn't do a lot of marketing that we were going to.
Right before we came on here, I ran to your profile to see if there was a tweet, and there was nothing. And I said, we have to line that.
Put it out right in the final 30 seconds of the countdown. Let's let some people know that we're back live. But yeah, honestly, really flattering, really humbling that, the AM show was such a routine for so many people's lives. And even during the kind of lack of attention that crypto and NFTs were having, still had great turnout in the viewership. Free Market and I both had a bunch of stuff going on in our personal lives that I think just kind of required us to take a pause, and it was a little bit longer than intended because they were not exactly at the same time. But I think that we're getting past that. Definitely not going to be returning to a 5-day-a-week schedule just yet. I do have some commitments in the mornings that are going to throw a wrench into that, but we're going to try and do it at least twice a week and go from there. I think looking at the news and the excitement, it is starting to pick back up. I think that was one of the hardest things about doing the 5-day-a-week show was just that, on a day-to-day basis, there wasn't always anything really exciting to talk about, which is fine because you and I can sit here and just chat for hours and hours anyways. But, with that excitement coming back, it definitely makes the search for content, the search for discussion points, and the ability to keep the content fresh a lot easier. So I'm looking forward to that too, and we will ramp things up as the economy and the NFTs and cryptos start to ramp up too.
Yeah. I think it was a funny comment by Cambo, a Death Star in this economy. But here's something I was screaming the whole time on the way down. And that was that we are not in a recession. And this was something that was hotly debated for a very long time. Remember,
did you change the definition of a recession too?
No. What I wanted to point out was that 2 weeks ago, we got a jobs number, and that jobs number was 500,000 plus created here in the United States. That was way above economist estimates. They were looking for about 250,000. That is not possible during a recession. That means you're not even near a recession. And consumer spending absolutely not slowing down, especially you look at things like travel, hotel, eating. There are obviously weak pockets, things like apparel. Maybe you look at your own life. Have you been buying a lot of clothes recently? That seems to be somewhere where there is weakness, and there are other patches as well. And of course, for a long time, food and energy were taking a huge bite out of people's pockets. And over the last 2 months, we have seen the price of oil, the price of corn, the price of wheat, the price of lumber absolutely crater. Now, it takes a little time for those.
Interesting thing about the oil, sorry to cut you off. I've actually heard that the demand for gas and oil has dropped to below March and April of 2020, the pandemic, the beginning of the pandemic. The demand for it is low too. So people really responded in their actions, right?
Exactly. And what was interesting about that, it was largely in response to being told that things were bad. Like your average person who is not following the stock market every day, has a crypto job, etc. They may hear that markets are down, but the biggest effect on their lives is gas prices, right? Like that's where they see things are hurting, and they certainly did slow down on that. Stories of people not filling their tanks anymore, thinking twice about going. So all that stuff that you hear, that's an energy crisis, okay? That is starting to abate. Oil, they talk about the stock market, which is down now, barely, I believe, 10%, maybe a little more this year. Oil from a peak of $120 got down to $88, almost a 30% drawdown. Lumber down 64% off its highs. We hear about building and housing, and why was there a supply constraint? Why were prices rising so much? Lumber prices were out of this world. They're down 64%. Wheat and corn also down 30%. These things take a moment to go downstream, but remember, markets are forward looking. Just like a few months ago, we're like, how are markets thinking this is going to happen? Well, now they're seeing the light after the dark. I will caution that this doesn't mean we're resuming the up-only bull market. What we're saying is that a forward-looking market has been seeing this coming since early June.
And the markets are smarter than everybody else because the market is an aggregate of social sentiment and intelligence, right? Like it is taking every action that everyone's doing in the economy and just aggregating it into a price structure.
And the week that the S&P made new lows at 3,600 and ETH and Bitcoin made new lows down, 90 and 60%. On the year, I listened to a Spaces, and it was run by a macro hedge fund guy. Macro hedge fund guys, they tend to lean bearish just in their own bias. Now, that doesn't mean that they can't remove their bias most of the time and be very successful. But when their bias begins to get confirmed, just like it is with bulls, they get caught up in it, right? And there was a point in June where I was listening to a space run by this big macro hedge fund guy. It was the most bearish thing I had ever heard in my life. They were talking about things being worse than 2009, right? But you have to understand, in 2009, the music almost stopped. Your average person still doesn't understand how close the Western world came to the razor's edge that year. There was no liquidity in the system. This was the opposite. There was too much liquidity in the system. That's a different problem, all right? And this was really a root of a bond crisis where bonds were down at that point 9% on the year. It was the most they had ever been down in recorded history. The second largest decline before that, 2.5%. Okay. Now, this is largely caused because of zero interest rate policies around the world that were or were not run too long. Here was the big question for everybody this year and why markets corrected as much as they did. Was the Federal Reserve behind the curve? Were they late in responding to inflation? Now, if you're the average person buying food at the grocery store and gas at the pump, you may say yes, though, if you thought about what the alternative was, in other words, what we're going through now, the Fed raising interest rates and almost trying to destroy the economy to slow prices down, well, that just would have happened earlier, before you were as rich as you were, before you had made a little more money at your job. Now, that was the argument this year. The Fed was late, okay? What we're seeing now, where commodities have fallen 3 months in a row, but the job market has not only not slowed down, it got stronger, okay? There's a very famous saying in markets, in economics called a soft landing. Can an economy raise interest rates to the point where it slows the economy down, but doesn't crash it, doesn't send it into recession? It's called a soft landing with a plane. This is looking like a motherfucking mid-air refuel. It looks like J. Powell got in a plane, got mid-air with the U.S. economy, fueled it back up, and now we're soaring while prices are going down. Now, everything is very data dependent. I was extremely bullish at you felt the market had overcorrected. Okay. Now we're very data dependent. Do I think inflation, we will continue to see disinflationary pressures and things will continue to get better? I do. I also think there will be moments of bad data and scares because nothing is just a straight line and everything climbs a wall of worry. And even
honestly,
now,
that's pretty healthy too. Like
yeah,
you don't want it to go parabolically up, even back to where it was. Like, let's just, let things pass, let things digest, and not shock the system one way or another, right? We've had enough of that, and now resuming regularly scheduled business with like a nice up and to the right line.
Oh yeah,
it's going to be really good.
Let's steer this macro discussion into crypto now, right? Because crypto.
So let me just set the stage too, right? Because as we mentioned at the beginning of the show, the last time we did the show back on June 30th, that was a Thursday, ETH was down below 1,000. It had hit below 1,000 a couple days before, rallied back, and then took a dip again below it. But ever since then, it has been again a nice line up and to the right. Obviously some pullbacks in between there, but bounced back very, very quickly every time that happened. Bitcoin, not the recipient of quite the drawdown that everything else did, and also not the recipient of the run that everything else has had, but also looking very healthy. If we zoom out there, it is a slower rise up, but if we go even farther, it wasn't quite as dramatic down as I mentioned. S&P pretty much doing the same thing. It looks like crypto has depegged a little bit from it in that we're getting some big pumps regardless of what the S&P is doing, but also doing very well. As Free Market mentioned, 3,600 the last time we were on the show, and now sitting at 4,200 and looking very healthy. I keep checking my stock portfolio, the little that I have in there, and it is continuing to do really well. So
especially meme stocks, like the quote unquote ARK or Kathy stocks, the ones like Square.
Well, it would have been doing a lot better if she hadn't dumped Coinbase at the Pico, or not at the Pico bottom, the absolute bottom. Apparently, like she was like the last sale before
we saw it happen. Yeah, we saw it happen live. You almost wondered what it was, because basically now we know that ETH has basically been
She cited SEC regulation
Yeah.
issues and concerns.
It was so funny because there was like that article about, now the SEC is looking at a bunch of coins that addresses associated with Coinbase employees bought days before they were listed on Coinbase, right? And the story with Coinbase is they used to be very strict about which coins they allowed, and blah, blah,
what a 180 on that policy they took.
Because then
after they went public too.
Yeah, right. Because then as business started to wane, all of a sudden they would push through any shitcoin that would apply. Now, employees, for one reason or you always find this an interesting psychological study as to why the human being jeopardizes what are potentially much larger future earnings for small wins, or
especially because they would have vested interest in it.
Yeah.
You followed all of that stuff going down. Of course, the Coinbase employee got fired and is now getting charged by the DOJ, along with, I think, his like two cousins or something like that. Yeah. All supposedly based off the Kobe tweet, who is calling out Coinbase, not the particular employees, and now feels some guilt that he got 3 people arrested. But
well, no, and one thing, I have been very bullish on the Kathy stock since June, not because I think these things are going to magically find revenue and that, the worst is in, blah, 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 just because, again, it was an overcorrection in how deep they had gone down. Now, watching Coinbase very, very closely, we literally saw her capitulate at the bottom. I'll tell you that day we came in, even though ETH has been pretty much up only in June, there were a few pullbacks of $100, $200 along the way. And one day ETH was down a lot. Coinbase was down a good amount, and it felt like it was just in sympathy with crypto, because at the time
it did, yeah.
Coinbase was moving basically up and down with big, like as long as Bitcoin and ETH didn't look like they were going to zero, you'd see a relief bounce in Coinbase. So it was very correlated to the actual crypto prices at that point. ETH was down like 7% that morning. Coinbase was down 8%. It was just like, all right.
We were talking about Coinbase being basically a generational buy at 48,
it was 55
50.
Yep.
Yeah.
I think it went down.
And I did not do it.
I think it went down another $5 at that point, but whatever. So we're watching it that day. And then all of a sudden you just see these huge sell orders come, and it's down like 20% on it. It was nuts what you saw. It definitely felt like capitulation. And while this regulation thing came out either a little before, so I forget exactly what the timing was. It was a convenient excuse. I mean, I am guessing that Kathy, for one reason or another, every fund has rules about allocations and correlations. And if this does this, you have to sell this much. And if we need this capital, this is the first thing we would sell. And but whatever rules she has forced her to sell there. And yeah, she was the last big sale towards the bottom. And Coinbase basically up only since. I think it got up to $110.
Well, and let's talk about why too, as we start to like just shift the conversation from macro into just the topics that we have. But obviously combining forces with BlackRock to allow their institutional investors some spot exposure or actual crypto exposure. Is that right?
Yes, sir. That is okay. So
let's talk about how big that is, because BlackRock, 10 trillion with a T assets under management,
largest,
the biggest player that you could possibly get. And according to studies and polls and whatnot, the people that have their assets under management from BlackRock want exposure to crypto. They want it in a big way. They don't want to own and self-custody their own coins. These are not people that want to have to deal with that. They just want the gains. They don't want the headache. They don't want to be flipping and trading NFTs and buying shibcoin or whatnot. They want Bitcoin and they want Ethereum and they want as much of it as they can get, and they want somebody else to deal with it. Like,
and they're not going to trust their money to Celsius, all right?
No.
Or Vortex, all right? When BlackRock puts out a product, you know it's backed by BlackRock, okay? It may go up or down in value, but you know that they're not going to all of a sudden say withdrawals are paused. Your funds have been gambled on, blah, 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 blah. Okay.
They're not 100x leveraging like 3AC apparently ended up doing. And just like, where's the money? Well, I don't know. Fuck.
Yeah. These guys are the overlords. This is the largest asset manager in the world. Okay. While the view is that this is all where the rich people have their money. Yes, you're correct. But it's also where school teachers and pension funds and college endowments and what are called fund of funds. In other words, mutual funds that do no work and just, basically are a fund of other funds. These guys are the largest in the world. They have more investment products than you can count. And this is as big a sign of crypto being legitimized as anything. Money talks, bullshit walks. And what is going to legitimize crypto is not you and I making $10 million on shibcoin. It's going to be when BlackRock creates a product that the average fund, like a college endowment of, Harvard, can go and buy, that gives them exposure to crypto without the risk of third-party, centralized shenanigans. Now,
and one of the famous things that Cathie Wood said about crypto was that if you take all of the companies in the S&P 500 and they allocated 1% of their value into crypto, just as some exposure, like 1%, very, very minimal amount of exposure. We've seen Tesla take way bigger stabs at it, MicroStrategy all in on it, just 1%. The price of Bitcoin would be $500,000 in an instant, right?
Oh, yeah.
So $10 trillion on an assets under management, 1% of that, $100 billion. Like, we're talking, the price of ETH just like basically overnight being 10K.
Oh,
it's a big deal.
People make fun of the $10,000 price targets. I want
no.
And 33,000, down the road as this actually happens. Okay, this leads perfectly into our next conversation because we're going to talk about the merge, right?
Yeah,
and
let's do it.
Talk about why, yes, ETH was down more, but why is ETH up so much? I mean, the ratio has gone crazy. ETH is regularly up 5 to 7% when Bitcoin is up 1 to 2%. And it's because the merge narrative really kicked in around, 13 or 1400. We had come off the lows. We were looking pretty bullish, having fought through some real resistance. And then the merge really came into view for a lot of people. Okay. And what is bullish about the merge? We've heard a lot on what is not bullish about them. This isn't going to make gas prices zero, and this isn't going to make it scalable up to, you hear all these things because people have placed so much hope on the merge that it's going to make Ethereum adopted by the mainstream average person, and we're going to go to the store and buy milk with ETH. Okay, that's not what the merge is going to do. But what the merge is going to do is create 3 very, very bullish narratives that we're going to go over. And yesterday was very big for the merge because after passing the Goyli testnet, I always pronounce that one weird. It's Geo.
Yeah, I don't even know.
I love it. I said it passed the girly test, and you're like, is it? What kind of crypto misogynist, ridiculous thing is this you have now?
You canceled ETH. Oh, it's got to pass the girly test.
No. So this was the last testnet that went well. Everything, I think. The one before it was the really important. I don't know. Everything has looked good.
It was one of the big ones, yeah.
Yeah. Everything has looked very good, and it has been now decided the block of which instantly the ENS was bought, so it's up there for sale right now. If you want to be block 58 trillion or 587 trillion 500 bit, whatever it is, that is available right now. .eth. But yes, the block has been decided. the merge is targeted.
Always bringing it back to ENS names.
Yeah, come on. Look, hey, there's a bullish narrative that we probably
we'll talk about
towards the end for real. But it is decided that block should hit sometime between the 15th and 16th of December. The merge is on. What does it mean?
Yeah, I mean, the big thing is, one, this is incredibly bullish and exciting for people that have been in crypto for longer than the last year or two. This was something that was 6 months away. When I got into ETH in 2017, it was always on the horizon. The plan was always to go to proof of stake rather than proof of work and fix a lot of these narratives that have obviously compounded themselves over time and boiling the oceans, blah, blah, blah. I think that's more of a Bitcoin thing. But it's finally here. And that's an incredible proposition, right? Because it has been on the table for the past 5 years. And it was one of those, it was becoming a meme. You were like, oh, it's 6 months away from being 6 months away. And it's always been that. And, you know, it's never actually going to get here. There were a lot of people that just thought they simply couldn't do it. It wasn't feasible. They couldn't alter ETH that much. It wasn't going to happen. I think a lot of that was like a Solana narrative and these other alt L1s that were really trying to push we're environmentally friendly. We have a higher throughput. We have lower gas fees. They have less of a development community. They have more downtime, et cetera, et cetera, et cetera. This is going to crush those alt L1's dreams, essentially, because 99.98% reduction in carbon emissions, whether or not that was actually something that was holding the price of ETH down, is always up for debate. It was always a media narrative because that's the low-hanging fruit is if something's bad for the environment, must be bad for everything. But I mean, you know, down basically 10,000 times the emissions is basically squashing that narrative, right? Like it's a non-factor anymore. So now it's just one less thing for people to kind of smear on ETH. They'll find other things, no doubt about it. Scam, money laundering. We'll talk about Tornado Cash going on or going down in a second here too. But I think that's one of the huge things that could propel ETH into the next paradigm. I think it's one of the things that got Solana as high as it is, along with the kind of the VC shilling with the environmental narrative. And now ETH is going to take that away from it. If the media picks the narrative up, whether or not people base their investments off it, I don't think that there were very many people on the sidelines that didn't buy ETH, even if they said it was because it was environmentally friendly. I'm just not buying that, you know? But I do think that it's just another nail in the coffin for some of these alt L1s. And when it all shakes out, I think we're always going to be looking at Bitcoin and Ethereum as number one and number two.
And, you know, what is happening to crypto now over these next 6 months and year? Okay. After what we just had, we can expect regulation, but that's not a bad thing. I think we've talked about that before, how now I would think regulation would be viewed as a good thing, coming to cleanse the market, legitimize it, make it attractive. Now, why do we want to make it attractive? Okay. Because ETH is now switching again to this proof of stake protocol, and the media narrative of low energy is going to work in our favor, especially, you know, I actually think the merge is going to make nightly news. I think the day that it happens, that at least your national nightly news is going to talk about the ETH merge. And one of the only things
on that, I don't think they pick it up.
I'll go with that. Well, the only reason I say that is because I think that crypto interests are going to pay to have these things talked about on the news. Okay. I do. Like Sam Bankman-Fried and FTX, that I think is going to be all over TV this coming fall, and you're going to see FTX everywhere. But okay, let's see, when the media talks about the ETH merge, they're going to lead with that because it's one of the most digestible things for the average person to understand. And it just takes away, NFTs being bad for the environment. One reason celebrities shouldn't get it, all this type of stuff. And the other thing has been pyramid scheme, right? That's the other, you hear bad for the environment, period scheme. Those two things. If you have regulation come in and 99% less energy, both those narratives are gone. Now, haters will always find a new narrative, but these are very positive things. So that's your marketing. That's your PR. This is what the merge is kind of doing for the PR. The brass tacks, of course, are going to be quicker transactions. Obviously, we're not going to get much lower gas fees, but we are setting the stage up for sharding. Of course, that will lead to much lower gas fees down the road.
The gas fees should actually go down just by virtue of the throughput being higher, right? When there's less need for competitive gas, gas targets, it becomes a lot more like, those big degen mints or something like that, where gas goes up over, 1,000 or 2,000, whatever they shot up to. When you're 100xing the actual transactional throughput of it, you just simply don't have to jam the gas as much. So while the base level of gas might not change too much, like if gas is sitting at 10, 20, like it has been recently, it will take a lot more effort and energy to push those up incredibly high, because every time I always like that ETH site that kind of shows the transactions getting on a train and the different cars and whatnot. Have you seen that?
I know it.
Yeah, and like those cars are about to be 100 times the size, right?
Yeah.
Like it's going to be cheaper. It's going to be easier to get on the car. It's going to be easier to send a transaction through. Sorry to cut you off.
No, great, exactly. These are the technically good things that are going to happen because of the merge, and then of course switching to proof of stake. Why are these things bullish for ETH price? That's another thing that you're hearing a lot, right? Like why should the price necessarily go up because of this? So there's three main reasons. Number one, the supply of ETH that exists. We constantly hear about deflationary, inflationary. What exactly does that mean and what's going to happen? So right now, on average, about $24 million a day is created in gas fees. And of course, that's paid to miners in ETH. That's created. That's inflationary, right? We need to buy, the buyers out there collectively, $24 million of ETH a day to keep the price from going down. Forget about the price going up. We need to buy 24 million bucks to get to even every day of ETH so that it doesn't go down. That pressure is going to go from 24 million to 4 million, okay? That's reducing the supply of ETH that comes on the market every day by 80%. Given the usage, that means every day more ETH is going to be bought than created, all right? That's exactly what you want to create a supply crisis. So this is a technical thing that's going to happen because of the merge. Now, people are front running this. We started this conversation. Why is ETH ramping more than Bitcoin and traditional markets? ETH is leading everything on the way up, even though it was down more. All right. So that's the first really bullish factor that you have here. This is going to happen instantly as the merge goes in. You're also locking up a lot of ETH too. Remember, all that staked ETH that everyone's worried is going to be dumped after the merge and all, they still have to vote on those proposals. They haven't, in other words, Vitalik hasn't built the withdrawal option. You know how people get scared, like,
oh my God, this is big clout. Yeah, I was just gonna say it's big clout all over again. Like, what do you mean I can't get my money out?
Withdrawal. Right. OTC, that's going to be the only way if people want to get rid of their ETH. And it'll happen. People will short perps against the ETH. Remember,
that was the incredible thing about all the VC lockups on all these early access tokens that they started pumping. It was like they're locked up for 2 years. They could sell them they sell the keys to the wallet. Like,
yep. Yeah, well, yeah, they do it OTC at a discount, or they do it through perps if it's popular enough, like Solana, where you could just short futures at the top, but still say you have, you have all this. So, this is no. This is what's happening. So you have the supply crisis brewing over here, okay, and then ETH being locked up as well. No withdrawal option. That's going to be built and voted on afterwards. Because the other thing, they want to pace it, of course, so people can't, take it out all at once. But the other thing this does now is create an environmentally extremely safe yield between 3 and 5% minimum. And I'm saying minimum because people have been calculating what MEV extractions would add to that yield, and it's a good amount. Maybe R2 and I can look into that to give you some numbers in the next few shows, but it's something a little technically complicated for me for now, but I will look into it. This yield is going to be so attractive to large institutions.
Yeah, and I was going to say that kind of ties into the BlackRock conversation and these other institutions that, explain to them what you explained to me in the pre-show when we were talking about it too, because it is incredibly bullish.
Yeah, exactly. Right. So right now it's very difficult in the market to get a clean 2.5% yield, let alone a 5% yield. Okay. Ethereum, as it is now going to be regulated, and it looks like these things we are now paying senators and lobbying Washington more than any other industry. I think about that. More than pharmaceuticals, more than cannabis, more than any of these other industries that have been pouring billions into lobbying. Crypto's number one right now. And we already had 2 senators who, to get the Inflation Reduction Act passed, were key. They needed to flip these senators and get their signatures on the bill. While that negotiating was happening, these 2 senators proposed legislation to allow Bitcoin and other cryptocurrencies to be used tax-free until it is withdrawn to a bank account. In other words,
I'm moving to the States if that's true.
In other words, transacting on chain, whether it's buying other tokens or buying things. In other words, if you bought Bitcoin at the store, let's say your local market adopted Bitcoin to be used at the store, you'd be able to use it tax-free. You pay taxes on the milk. You're not getting taxed on your Bitcoin. In other words, if you bought Bitcoin at $1 and it goes to $10 and use 5 of that to buy your milk, you don't get taxed on your capital gains. That is what's being proposed by 2 senators that were key in getting that legislation passed. And guess what?
All of a sudden, buying that Tesla and Bitcoin seems very, very attractive.
Oh, yeah. Okay. And when you combine healthy legislation coming down for crypto with ETH with an environmentally safe, guaranteed yield, okay, that's not going to dip below 3%, no matter how popular ETH gets, and forget the capital gains behind it. This is exactly why you see JP Morgan and Goldman Sachs holding the Alternative Asset Conference here in New York. It's why you see BlackRock getting ready in a big way. The institutional adoption phase is upon us, and they are going to be buying ETH for the yield, and they are going to be staking it. This is so astronomically bullish. It's insane. And these are 3 factors that are all happening.
All of this is pointing to the fact that very wealthy people and very, very big corporations want your crypto, right? Not to sell it. They want to start hoarding it. Like we've seen this time and time again. In the midst of 3 Arrows Capital collapsing, Celsius, the Luna, Terra going to like below 0, like all of this stuff, all of this FUD, all of this horrible news that makes the normal person say, yep, new crypto is dead, which we've heard in 2014, which we've heard in 2018. We've heard it time and time and time again. And we are still above the all-time highs that we set back in 2018. Well, Bitcoin ETH is very close to it. But, just in a 5-year span, we're up an incredible amount. And the narrative still is crypto is dead because people don't look back. They just see what's happening now. But in the midst of all of this, and this is different than 2018, these big companies aren't backing away from crypto. They're now leaning into it. Back in 2018, these big companies, these wealthy people were like, they were doing the Homer Simpson into the bush thing, being like, ooh, like maybe we didn't want to put our names on cryptocurrency. Maybe we didn't want to support Bitcoin. Maybe we didn't want to make that tweet. Right? That's not happening now. They're leaning into it. They're saying, look, give us as much of it as you want, right? Well, it's lower. We paid less taxes on it every time we collect it. The upside is way higher. Like, please, we want it, right? So this is just one of those things that's a matter of time. And I'm not going to say that in a month we're going to be at all new highs. I'm not going to say this year we're going to be at all new highs. It could be 5 years. But if you take that longer stance, if you're patient, if you manage what you're stacked properly, and you don't get impatient, you don't try and make those flips and those gains, the long shots, and dwindle your stack down to zero, as so many people do, especially when the prices are low, because now all of a sudden the dollar value seems to be less to them too, right? If you manage that properly, like this is where, as you said on the morning show a million times before, the bear markets are where millionaires are made, right? And the bull markets are where millionaires are realized.
And why are you bullish during this period? While there's been a bear market in price that is undoubted, you see it obviously 70, 90% down. Yeah. There has been a nonstop bull market on what I call the back end. And whether we're talking about NFTs with Tiffany and even Budweiser and other companies continuing to invest in the meta and Web3 at a higher rate than they were during the bull market, okay? At a higher rate, you're saying, well, there may be a bear market in price, but the bull market rages on the back end, and that's what keeps you bullish. People are, well, not people, but large companies and institutions are using this bear market in price to create and to get positions in this crypto world now for the next move. And it's going to be corporate and institutional adoption. And I'm telling you, the merge is the most bullish narrative in crypto. It's being discounted for a ton of it. I guarantee if we zoom out 20 years and we look back, we're going to be like, could you imagine the gift that was handed to you at a strange time when you're in it? There's confusion. You don't know it. Just like COVID, just like 2020, it's confusing. You're in it. You don't know what's going on. You look back in retrospect, you're like, holy shit, I was crazy to not, blah, 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 blah. That's what we're going to look at it this year, because that is how bullish the Ethereum merge is. And we are looking to, we will, I'm sure, talk about it many, many times before September 15th, but that is your date. I think it's very bullish for price. If we want to talk about some short-term price action, you obviously, we're at 1885 right now. You obviously have some short-term resistance at the round number 2000. That's just mental. There's nothing particularly interesting on the volume profile or any daily averages, or it's just mental, right? 2000 is a big mental level in people's heads. Mm-hmm. That will be resistance. Then your really major resistance is between 22 and 2300. That is where I would expect at least a pause, right? Like, let's look at it this way. We're going into late August soon. Everyone's finally flipping, but they weren't bullish at 3,600 and 900. They're finally starting to flip bullish now at 1,800 and 4,200. Now, that doesn't mean they won't be right for a little bit, but you've missed the meat of the move, and late bulls always get punished. So I would expect us to get to 2,300 on this run, maybe after a brief pause at 2,000. Then pull back to that 2,000, 1,900 level. Crypto always goes deeper than you think, even if it's very brief. So maybe even that like 1,780 1,800 major resistance we were churning at for a bit. I could see us getting up to 2,300, pulling back to there. And then I think there's obviously two things at play. One, merge has to go well, of course, right? You know, there are bearish takes on the merge. There are competing chains now boiling up. Are we going to talk about that a little bit? ETH Classic rearing its ugly head with a new protocol called EC. What is it? ETW? ETH?
Oh, I heard something about it, but I don't actually remember.
ETH POW, it's called.
Oh, right. I want to take a quick pause. I didn't realize that the chat on Restream wasn't actually moving. Thank you so much, Restream. So I logged into YouTube on another browser. Is my mic sounding all right now? I didn't realize that.
I didn't know if you were just rugging for me, so I didn't want to say anything. And because no one was typing in the side, I didn't.
Yeah. Audio is cool now. Okay, perfect. Yeah, I can read it on another browser here. I normally, when we were doing this, have a second browser pulled up just to watch it, but I forgot to today. It's been a while, so appreciate you guys shouting that out. Anyways, sorry, you were talking about ETH POW.
Yeah, so there is a hard fork being proposed that some large miners have gotten behind, and Justin Sun said he's committing $10 million in ETH to the chain. You know, there is a bearish narrative being and look, who does this narrative benefit, right? Like if it only benefits miners, who gives a shit, right? Like I said, let all the miners go away. BlackRock is going to be there to pick up the slack. Okay?
Well, almost every ETH in existence has been mined at some point, right? So it's like they've done all right. Don't worry.
Well, but that's the point, right? Like what is the point of having the proof of work chain from a consumer? If we're at the stage where we need to start making these things appeal to the consumer, what are the advantages? And maybe there are one or two. My question is, does it outweigh the mass adoption advantages of switching over to POS? So so back to what are we going to be watching? All right. So in September, we're obviously going to have the merge needs to go well. These other bearish narratives can't pick up steam. The technical aspects need to be executed correct. All that stuff, right? But we also have macro. Now, if ETH does pause in that 2,300 area, as some technicians expect, we're going to, I think, be pretty macro dependent for a few weeks. The last 2 weeks of August, the first 2 weeks of September, right? We got a very soft inflation number very soft is relative. I know inflation is still high, but when you look at month over month numbers, we were actually flat. There was no price increase. There was no inflation when you average it all together. That's good. This is exactly what the Fed was. They don't look at the headline year over year number that your newspaper prints. They're looking month over month because they don't want to go too far, right? The Fed needs to look tough. They're not trying to break the economy, okay? But they need to look tough in fighting inflation for political reasons and for game theory. They have to make the market think they will do something to cause it to behave, right? It is this classic psychology. So we're going to be watching the macro very closely. If we continue to see disinflationary pressures and macro and the S&P 500 and NASDAQ continue to find footing and can go up, I do think we're going to break through that 2,300 and can get up to 2,900, 3K into the merge, and could even get up to 3,600 on some sort of blow off top. But then, of course, we would have sell the news sometime, maybe even in October. I don't think it'll happen right after the merge because that's too obvious. Like there would probably be, like I said, some sort of scam pump to trick the bulls into thinking that we're going for, right? Like if we're at 2,900, I could see the scam pump above 3K. If we're at 2,300, I could see the scam pump to 2,900, right? Like that'll be what it is. Then there will be a sell the news and we will be 100% macro dependent during that, right? Because the bullish narrative will finally be understood by everyone, okay? It takes convincing. And while you can have all your reasoning in the world, what convinces most people on anything? Price. Right?
Yeah, 100%.
That's what convinced people we were in a bear market, and that's what's going to convince people that the merge was this big bullish event that we in retrospect.
Yeah, people weren't even that bearish until we like crossed down below like 1,500 too.
Yeah.
Like there was like this like 2,000. Everyone was like, "It's okay, we'll get back." Like 1,800, like, all right, we're holding steady. We even like I even did it sometimes too. And then it was like 1,500. They're like, "Oh, this is actually kind of getting bad." And then the 900, we're like, "Oh wow, like that's actually that's low."
400 coming,
like,
and then once you get down there, then anyone who is bullish now has $800 price targets and 400. That's how you know you're close to a bottom. But hey, bottoms are a process, as I always say, and it was, right? It wasn't like we V'd off that bottom and got here. We churned for a while, and like 2 times we looked like we were going to take out, and
people were squirmish. You could see them just crawling like this is the end.
We get back.
Guys, I promise you, stick around in crypto if this is your first bull run and bear run. It does get easier. You get used to this. I mean, even myself, having gone through it once, I've seen people go through it 2 or 3 times. It still does get hard. You feel the doubt start to creep in your mind, but then you just remind yourself that you heard all of this before. You heard it when ETH was at 100, when it was at 2K before, and it didn't die. The narrative has only gotten better. Nothing fundamentally about it has changed. Regulations actually gotten pretty favorable on it, despite like things like Tornado Cash happening, which is literally just them saying like, "Hey, we just want people to pay their fucking taxes." Like don't launder money. Don't and there's a huge discussion about that. I'm not saying that I want Tornado Cash to go away or whatnot, but the government could have taken way bigger steps to ruin crypto than messing up Tornado Cash, right? Like there are things that they could have done and they didn't do that. So like there are tons of things to look forward to, and nothing has changed from 2018. In fact, it's only gotten better. So, when you hit those bottoms, you do squirm, you do see the number, you do see your net worth go from very, very high to, wow, that's only a small fraction of what it was. And you do feel that pain, but that is the market testing you, right? And a lot of people exited, and a lot of people are going to sit on the sidelines until ETH is back above 4K, 5K, and they're going to be like, oh shit, like ETH is still a thing. Now I got to buy again, right? Those are the short-term focused traders that aren't going to do well, the ones that the market crushes. If you just kind of hold on, and again, your own personal situation has to play into factor. If you need that money to pay rent, if you need to put food on the table, sell. Nobody should tell you otherwise if that is the case. But if this is not an overextension, if you feel good about your position, your lot in life, you still have an income from your traditional job, or maybe if you're even trading well, just stick around. The next time in 2026 when we're having this conversation again and ETH bottoms out at 5K, you're going to remember all of these things that happened, right?
And the thing is, bull markets climb walls of worry. You may have heard that saying a few times. And it's like, I also said, we're not going to bottom when it looks good. It's not going to be like, everyone's gonna be like, oh, everything's great now. It's all clear. We bottom into. We're gonna bottom when it looks as bad as it's ever been, and like it's gonna get worse. Okay, and it's the same thing with a top. You top when it looks as good as it's ever been, and like it's never gonna get any, and it's only gonna get better. So
well, let's jump into NFTs now as we kind of hit the tail end of the show, because still in the process of bottoming out in terms of volume. A lot of projects are seeing a big fall from grace just in terms of ETH and dollar value. We still have a bit to go. Obviously, the intention is on coins right now, but still, paying attention to NFTs, being in NFTs. What are you seeing? What are you feeling? And what's the bull and bear case right now for you?
We had a nice NFT pump as ETH crashed. And you could just argue that it was a response to the dollar value of certain NFTs at a certain point. And we're talking really about, blue chip and secondary blue chip collections. You saw a decent pump in those art blocks, mutants, off their ETH lows as ETH itself in dollar terms started to crater. Now, as ETH has rallied up to 1900, we're down across the board, and not just in floor price, but in volume.
Yeah, I mean, not too long ago in May, we were 60 million in volume. I could probably zoom out a little bit further, but that's as far as that chart goes. Going into July, we're talking 13, 15, $10 million in volume. Quite a dramatic drop in terms of just NFTs moving around, but there is still action going on.
That big spike that day was from the Tiffany drop that you see there. And then when you smooth that out, we're barely getting back against that bump high you saw towards the ETH dollar low as people realized NFTs were cheap in dollar terms. So what I'm not trying to cast doom and gloom. I'm just trying to assess where the NFT market is. But let's look at the good parts of it, because I would say the free mint meta continues to march on, because obviously not just opportunists, but anybody who had a well thought out collection is also going, well, I can't really charge money now. Both the macro reasons and the current meta say that I should be a free mint. So here and there, you're getting a high quality free mint, and you're still seeing very nice rolling pumps. I would say the two right now that have captured the zeitgeist would be the Rare A Pepe Yacht Club, which was created by the Pepe Lisa Rare Pepe Cards artist. So it has a little provenance in that respect. And it's pulling in those 1,000-person spaces you see right now, just like Goblins used to, just like We Are All Gonna Die used to, but they're not the hot tickets right now. And it's moved on to this. And there was another great pump caught by Clampy in the Degen Dojo that you were a part of, my friend.
Yeah, man, I just happened to look there when Clampy sent the message for the Digi Daigaku, and normally, like, it was a free mint, one per wallet. I managed to get one real quickly. Normally, I actually pay attention to this, and I'm kind of having some cope because I typically try and, if I'm taking a position in something, take between 5 and 10 and catch it low, when it just finished mints out and you get that price discovery. And oftentimes these things are trading below, 0.05, 0.1 if there's some excitement around it. And they were sitting there for a little bit, but within 2 hours, I mean, it ripped up to like 0.8 floor, and then it cooled off. The volume seemed to be drying out. So I exited with my one at 0.75. And then it took off up to 2 ETH. The interesting thing about this one was only 2K supply, but also, contrary to most free mints, not an instant reveal. So these things sat there pre-reveal for a while. And as it turns out, the team members, the founder of this, looking to get into P2E, founding a company called Limit Break, he actually founded a couple of big mobile gaming apps called Mobile Strike and War something. If you watched TV a couple of years ago, you would have seen the ads all over the place. They had Kate Upton, they had Arnold Schwarzenegger in the ads, just in your face everywhere. Millions and millions of daily active users, killed it. So he is now partaking in NFTs through Digi Daigaku. And there might be something pretty bullish about this, but right now, volume is slow after the reveal, and they're actively selling for below 0.9. Again, got up to as high as 0.2, or sorry, not 0.2, 2 ETH, but a hell of a trade, hell of a call out. And, a 9 that ETH isn't exactly dead. The total volume on this project, just 1K, actually pretty low. But again, the supply was pretty low too. So it didn't take a lot of movement to really move the price up. You would be sitting at 0.6, 0.7, then all of a sudden someone would come in with a sweep of 10, and that next thing you know, you're at 1 ETH. So a bit of a wild ride, but if you were in there and you were playing it, did very, very well. You mentioned Rare A Pepes, 5,000 ETH in volume over the last couple of days. Huge spaces, huge attention on them. We saw the same thing with We Are All Gonna Die. We saw the same thing with Goblin Town even just a couple months ago. Goblin Town holding up pretty well. We Are All Gonna Die not quite doing the same thing. But there still is an appetite for people buying and flipping, whether or not they're just playing mint roulette. People are still spending their ETH. People are still actively engaging in buying and selling. And I think that there's still a lot to be excited about. And I honestly, personally think that there's tons of projects out there that are dramatically off their all-time highs that are at least worth a look at, right? You know, the only one that I'm actively avoiding right now is actually Cool Cats, because they just seem to not get it. But there's tons going on and there's tons of opportunity. However, if you're not doing the mint and flip, you got to be willing to hold that liquidity on the sideline for quite a while. And, you know, if you can trade the shit coins and the altcoins and all of that stuff, there's probably more opportunity present than that. So it's
the coins will move first. You know, it's as I've always said, it's less the dollar price of ETH, except at the extremes. Okay, except at the very extremes of the lows and the highs. It's rarely that, it's the volatility of ETH, right? It's just, honestly, you would see this if you looked in history in any country. If a currency is volatile and you don't know how much it's going to be worth the next day, you're likely not going to buy anything with it because it may be worth more the next day. So volatility is the enemy of NFTs, and we're still in this very volatile area. And I don't think we're going to be out of the volatility until after October or November. And then we may get what I think is going to happen if we have the period of relative calm I expect between, say, you know, November and February. That's also a traditionally bullish time for NFTs. It could be a nice window that lines up if ETH settles wherever it is and goes sideways for a while, lined up with a bullish seasonality window and hopefully a lot of new great stuff everybody's been working on, whether it's games rolling out or whether it's new collections that are minting. So I do think that NFTs are going to come back even this year. It'll just probably be towards the end of the year. And the focus for, you know, if you're a trader right now, besides listening and hanging on to any word that Clampy types because he's an absolute sharp, you would be paying attention to the macro because there's good action in, as R2 said, alts. Remember, you know, the next SHIB or the next this, they're probably starting to get out there now. Those next 100Xs, those interesting things, the new metas. You know, we have a merge happening. We have ZK rollups. You have new L2s. You have soul tokens. You have the Tornado Cash thing, which we didn't have time to dig on too deep, but so many things, so many copycats and you know, twists on that concept are going to be coming out soon. And let's look at the one thing that we should, and that is that DeFi, true DeFi, did not break. It was the only thing that continued to work seamlessly through all of the volatility. You could still trade tokens on Uniswap. Aave was still humming. Curved out, every pool worked like a charm, whether the yields fell very low or not. DeFi is the shining star of this bull market. And it's a shame things like Celsius, which are really centralized, you know, Ponzi schemes in retrospect, but in, you know, just shadow banks that claim to get you good yields through DeFi. That wasn't DeFi. DeFi worked, and DeFi worked great. And there's your other narrative, right? Uniswap, Curve, Lookstyle, all these things working like a charm. So there's a lot out there that I think is going to be bullish over the next few months. Let's see. So it's been great, R2, to be back with you.
Man, this felt really good. It was almost a little bit nerve-wracking. It's funny because, you know, 145 episodes before this, you really just get into a rhythm, you get into a vibe, you just log in, you fire it up. We have a quick call before and start talking about things. So like this morning, I was like, woke up early and I'm like, oh, I got to find things to talk about. And then you just start getting into it. I'm like, oh yeah, this is easy. This is enjoyable. You know, the chat is humming along. Of course, the restream rugging us a little bit, not seeing that, but, you know, looking back on it, some great conversation going in there. We always appreciate that. Dekenza, no, not going to do daily right now. There's still some stuff in in my life going on that is going to not make me go full force every single morning. But I think as that kind of clears up and as the market continues to hum along and some excitement comes back, especially in NFTs, we'll start to ramp it up and get back into a really good routine. So right now we're planning on doing, I think we talked about Tuesday and Friday just for the time being. And then we can start to kind of fill in the blanks as the availability opens up too.
Yes, exactly. So
I lost your
train of thought.
No, it's all good.
Yeah, that was beautiful. That should be on a plaque in our office on the Death Star.
What? Yeah, no, it really is great. I did have Crypto Dick Butts pulled up there too. Flipping cool cats, really going on a run. There are definitely things to be excited about in NFTs as well, and it's not looking as bleak as it did even just the last time we were on the show. So this has been an absolute treat, an absolute pleasure. What are you up to today? What's going on? What are we looking at?
Founders Friday on the morning squeeze.
Still going strong on the squeeze, I see. Yeah.
Noon Eastern, a little bit later. I'll be playing some Star Wolves, some Ether Orcs, of course, Raid Party, which, I will tell everybody this right now. For a dead game, it certainly has one of the better yields that you can actually get something from out there right now. So I would take a look at it. Guilds just launched. So
yeah, how's that been going? I logged in to see that Guilds was active. I didn't.
Well, it's one of those things that really benefits established players, right? And to an extent, that's one area you really need to cater to because there's so much confetti stacking up in those accounts. So you both have to clear that confetti surplus and then appeal to new players. So there's like a two-prong approach going there. But, the on-chain gaming thing is still where I think the next big meta is going to come from. And I don't know where that spark is necessarily going to be. And certainly this macro bear market got in the way of my timeline. But I think when we're talking about, what's that next? And I don't, it could be what we talked about a month ago with Grand Theft Auto incorporating some sort of spark that just gets people to go, oh yeah, this is the way that it should have been. So on the lookout for that. But that's kind of my day and week. And watching, I'll tell you, really, really watching markets and ETH here. We're at a very, very critical area. If we get above this current resistance we're in, and I'll tell you, it feels like ETH is being held back by the S&P right now. The S&P ran into resistance before ETH, and then ETH always looks bullish, so that every time the S&P opens, it falls $30 and just is. So let's see what happens. Today's Friday. S&P is going to close wherever it's going to close, and then ETH is going to be the star of the show, people. Bitcoin, it's steadier. That's a good thing if you're a Bitcoin. No one's knocking it, but ETH is the star of the show right now. Let's dig into this merge narrative. I think this could be the weekend we get over 2,000, but I am watching 1,700, 1,680 ish on the downside. Losing that level would make me rethink. And remember, we got a bit of time here. The last 2 weeks of August could be bearish, and then you still have 14 whole sessions in September before the merge actually happens. So there's a lot of time for a pullback here. Let's see when it comes.
Yeah, August is a really interesting time because not just for markets and crypto and whatnot, but like attention and volume really dies like across the board almost everywhere. People are in the dog days of summer. They're going on vacations, they're going to their cottage, they're taking time off just to spend it with their family before September rolls along and the world kind of resumes as normal. Kids go back to school and all of that stuff. But you do see it across the board. Like I can go into a restaurant on Thursday, Friday night, and it's half as busy as it normally would be. You can, unless you're like on the beach or like some kind of tourist destination, things are just slow kind of everywhere in August. And that typically has always been the case too, right? So I'm very excited going into September. You raise an interesting point. Like we're not completely out of the woods yet. We come on the show very bullish about the way things are looking. A lot of that is just based on the last time we were on the show. It was a completely different outlook. So to be back and talking about things in like a really positive manner becomes very, very easy. But I mean, none of this is saying that we are going to be up and to the right only for the rest of time, right? We're going to take our lumps. There are macro situations on the horizon that can really throw a wrench into things. We didn't talk anything about China, Taiwan, all of those situations that are going on. And I don't think we're going to today, but you got to keep an ear to the ground, keep an eye out for stuff too, because
we're
not just
close to resistance right now. Okay, if, like I said, if ETH or the S&P got above this area, it's been like bouncing at for a few days. It's like another 5 to 10% up before there's any real resistance. So it would be a real breakout if it could get above. That's why we're churning. So we're like R2 said, we came on bullish because we're up 100% since the last show. We're right near resistance.
Yeah, for sure.
Right. So let's see what. Here's my take. There's going to be a $200 or $300 pullback in ETH before the merge. I just don't know if it's coming here off 1900 or if it's going to come off 2000 or if it's going to come off 2300. I do think the ultimate destination pre-merge is 2300. And depending on how the media narrative changes, I am looking at that 2,900, 3,000 area if we get those macro tailwinds in a good way.
Love it. All right, I'm going to take this opportunity to just ask you guys, if you can, please hit the like button on this. We are trying to revamp things here with the show, kick things back off. It really does help seeing those likes on there. It helps with the algorithm, it helps with exposure, and it just helps us feel good about ourselves. So fuck it. If you could hit the like button, really appreciate it. If you're not subscribed, also helps in a big, big way. I'm really excited to be back up here with you, Free Market. Tuesday is going to be the next show, and we will look forward from there. You guys are honestly the best. The amount of time that you spent talking to us about the show, looking forward, telling us you're excited for it to be back, it really does mean the world, because we spent a lot of hours up here on the show, and when we had to take a break, it was a good feeling to know that people said, you were a big part of my morning, or I listened to you on the drive home from work because I can't catch it live. Like, those things really do make you feel good about the content and the discussions that you're having, and really does help motivate you to keep going, keep doing it at as high a level as you possibly can, and just wake up in the morning. So this is amazing, great feelings. Free Market, it's time. Get us out of here.
Good luck at the tables, D-Gen.